Hi folks, Nick Shaheen here, recapping the week ending 116. And boy, it ended with a loud bang. All the markets are up over 1%. The standout are the small caps. The RUT specifically is up 1.9%, but let's not rejoice. There is reason to be cautious still. All right, here's the S&P today. Nice up channel after an iffy open. The open was so iffy, and I'll show you why. Apple has a lid, and today did not participate at all, and we kind of saw it coming, and we kind of wrote up about it and talked about it. The 105 I thought was a target. It came pretty darn close. That's pretty good foresight on our part. Here is why we're not rejoicing too much. So this is today on the small caps, up and away, up almost 2%. But look at yesterday. Overnight lows. So today just erases all the damage from yesterday. Almost, not quite. All right, so is this a reason to hoot and holler? I don't know. We'll check out the weekly action. Oil. CNBC made me laugh. Right at the close, Bob Pisani said, it's nice to see some stabilization in oil. What? Up 4% is stabilization? Since when? Actually, it was up 5% at the close. How is that stabilization? It was up at 51.73 yesterday. That's the high. The low was like 10% lower, a 10% swing. So it went from plus 5% to minus 5%. It's probably bigger. I'm not doing the math right here, but I know it's bigger than this. And then back up to over 5% today, and they call that stabilization. Anyway, bonds were down, rates were up, and all's well in the world. Here are rates. Yesterday, the scare, 1.7 on the 10-year. Now, let me show you something before I move on. These are the rates for a year daily. Remember the flash crash in rates that brought us down to the end of the correction mid-October? It crashed all the way down to 1.86 something in the 10-year rates. We thought that was the end of the world, and we immediately rejected it that same day. Look at that. Whoop, and then up and away, and the recovery was insane. Now we're happy to even not come close to it. And I already posted a video today. You should have seen it out there. And that's the chart that I posted. This green. And I thought that it's worth a shot on seeing a bounce here. So we played it via the bonds, shorting the bonds. Because if bonds rise, if this rises, bonds will fall. So okay, so that's a side note. Back to today. So the ES, let's look at the 2-day price action, just like we saw this recovery here. No different, almost like yesterday. This is where Christine Lagarde started talking, and all the way down we go. Look at the scary number that nobody talked about today. 1970 ES low overnight while we were sleeping. 1970. We closed in the high 80s, if not 90. That's like 20 points lower. We recovered before the open. We had some fantastic economic numbers, and up and away, but not before hesitating for a couple of hours. Here's the Nasdaq. Look at this number, 4041. 4041. That is pretty darn low. Pretty scary stuff. Nobody's talking about it. All right, let's zoom out and look at the weekly numbers. Let's see if, whoopsies, right there. These are the small caps. See? Big candle, still red. 3 weeks of redness in the small caps. That does not tell me go out and buy small caps. That just tells me I'm having a lower closes. So closed here, closed here, closed here. The high is higher than last week, but not very convincingly so, right? The low is lower than last week, so this candle eats this candle. So this candle is almost a mirror image of that one right there. I don't know what that means for now, but I do see a lid right here, right? And we'll look at it elsewhere. So volume was pretty decent, just as heavy as last week, almost double the week before. Let's look at, okay, so the peak into next week with the IWM is that it wants to stay around where it is right now, 116, 117. That's the assumption going into next week. Now, Tuesday's pre-open levels will give us an exact range based on what happened today. A lot happened today, so this peak could change by Tuesday morning. So I will have that before the open on Tuesday. IWM. Let's look at the Qs. The Qs are also pinned around where they are right now, with not a lot of room to go. So even if it tries to run up or sell off, there's resistance and support in each case. But you can see I can draw a line, and I did draw a line, lower, 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 lower highs. That's not good. You can almost draw, a little descending channel there, kind of like a little flag thing. So sometimes they're just resting areas for more upside, but this is heavier volume than last week, and it's red. Last week was almost red. It was a doji indecision. And look at the volume to the week before that. It may have been holiday driven, but still, it's good heavy volume, so we need to pay attention to it. So what about the SPY? Did it have a green week? I doubt it. No, it did not. Also a doji the week before, which means indecision. So we got red, not red, red. Also, I can say lower highs, lower closes. Not good. Not lower lows. Yeah, actually, it is lower lows. This is a freak candle. Don't look at it. Nobody will explain to me why did we go to 212.5, whatever it was, way up there that week. Never happened, but they still show it on all the charts. Okay, so now we have lower highs knocking on this area level right there, which is the contention level right here. So what's going on right here? You see that it was a lid, and we failed, and then we tried to break out of it, and then we failed, and then we got to it and broke out of it big time, and here we are. Is it going to support us to leap back up? Possible. This is a good one. If it stops right here and it goes up to here and closes up here, then it may be going to do another one of those ascending channel, another ascending inverted scallops, I think they're called. But I'm not too optimistic yet. However, next week, peeking into next week, the SPX wants to be between 2050 and 1950. They're not overly exuberant to go higher than that as of now. By Tuesday morning, they'll update with today's action, so we'll have a better idea as to what they expect for the 4 days of next week. So, having said that, how do I play next week? Number one job is to stay out of trouble. And what gets you in trouble are coin flips, guesswork. Next week is nothing but a coin flip. You can do all the homework you want. All of that will go out the window as soon as the ECB decision comes out, and all markets are going to go crazy. And then a little bit after, they're going to digest it, and then Draghi is going to start speaking on the 22nd, and then things are going to move again. So what's to come next week? Everybody was, up until 2 weeks ago, expecting, we've been running for months on the fact that Draghi is delivering something big, and he keeps telling us every time it's due, oh no, not this time, next time, not this time, next time, not this time, next time. In December he said, not this time, next time. So this time they started pricing out the Draghi effect for the last 2 weeks. That's why we've been trickling down 3 weeks. The Swiss currency debacle, which was, by the way, a massive move that has global repercussions, and no one still has a clue as to how far reaching those repercussions are. We're still going to see some fallout from that. I am convinced of that. I'd be very surprised if we don't. But anyway, hopefully we don't. So that move gave hope to all the European markets. That's why the European markets first reacted negatively, and then they ripped higher that day, because they believe now, Switzerland must know something. The ECB may have given them the heads up, hey, look, we're going to do this. And they wanted to jump the gun and get out in front of it, although I don't know what good did it do. I mean, it completely, oh my gosh, the reaction, usually currency moves in like tiny little fractions, and 11% followed by a 15% move back to back is insane. I don't know if it's ever been done before. So to a major currency. So the repercussions were huge, and the hope now is built back in, I think, the fact that Draghi will deliver something. So now we're back to being in danger of being overly inflated, hanging on hope from Draghi. So here is my guess as to what he's going to deliver. I don't think he's going to be able to deliver something big to say, oh my gosh, let's run up 5% today, because of Greece and other issues, and because of Germany opposing everything else. So It might be that the economics are so bad in Germany that they actually fold, but I doubt it. So they might deliver something. So the markets may react that, oh my gosh, we have a headline of ECB QE came. And then they may read it and say, wait a minute, we expected like almost $1 trillion, and this is like 300 billion. They might sell it off. So what do? I stay small, I stay balanced, meaning if I take a bullish position, I better have a bearish position to offset it. This way I'll have something to book and offset the reaction. It may end up all being a fizzle, meaning they're going to react up and then deflate it a little bit and end up exactly where they started. So I take credit put spreads that are really low and credit call spreads that are really high, and I stagger them in time. I don't have to do them for next week, so not to be blown out. I'll do them 1 week out or 2 weeks out. So I don't, or I just stay out and watch it and enjoy it and eating popcorn. There's no need to trade every week, and especially when it's a violent binary week. I'm comfortable holding a few positions with a very limited risk. And I know that even if I'm 100% wrong, I can lose X. And if I'm 100% right, I can gain X, Y. So it's a good balanced portfolio where if it runs up, I can close everything and lose a little bit of money. And if it doesn't run up too big, then I'm good to go and I keep my premiums. If it sells off a little bit, I'm good to go. If it sells off a lot of it, then I can close everything and be almost even. So just make sure the portfolio is balanced. Make sure you leave room for plan B. Don't squeeze every penny out of every trade. Close early. And I see a lot of messages from a lot of you that are doing just that, and it's just incredibly encouraging. We have some pretty smart traders. All right, so this is today as far as price action, and today as far as how the day ended and how I see next week unfolding. So ECB is the only thing traders are going to be talking about next week, major, and it's going to drive almost every move in the market. They may meander in the beginning of the week. They may see some strength in the middle of, in the beginning of the week a little bit, just because of what happened today. But you know what? 3 days is a long time. Headlines. So we may have a plus. They don't celebrate MLK overseas, so we have actions. We have the added volatility of not being able to do anything on Monday. So it is kind of a double-edged sword. So I don't think anybody's going to do anything drastic before the ECB, but if a headline comes out, markets are going to react undoubtedly. There are a couple of names that I had requests to cover, and I'm going to do them right here. Baidu, which we haven't looked at in a while. That today is green, almost up 2%, but the candle is doji-ish, so there's still some indecision. So next time we open, if it is a green day, I think it'll be a big day for Baidu because it wants to move even more. Because today they tried, but they ended up closing almost where they opened. And they shrugged off a sell-off. So I do like it from that standpoint. But the open interest doesn't tell me that they want to be a lot higher than that. So there is a struggle between 220 and 240 between here and February. I know it's a lot of time in between. So to be very accurate with that. So it's about of market perceptions really. I guess you can look at bearish patterns in spirit, especially if this run up fails right around here. So what I want to do is I want to draw a line right here, thereabouts, and see how it handles the next $5–10. If it's trying to reach for 230 and it fails again, then I think it's in danger of losing this level right here. So this is an important level area, I should say. It's a box, so you can draw right here. And then you will say, okay, it's having lower highs, knocking on a floorboard, so it's going to end up squeezing into a point somewhere around here if this continues. 222 or so, and then what? It has to resolve itself, right? There's a whole bunch of energy. Is it going to leap up or down? This may coincide with the earnings, so I'm not doing any credit spreads in that until the earnings. And if somebody wants to take a stab on it with a debit spread, they might have time to do that. You can probably take a debit call spread from here and see if you can capture that move up to 230 that may potentially come. But again, that's going to depend on Draghi. But you can see it's a nice move here, it's a nice move here. Maybe it's repeating the same nice move here, maybe slightly smaller because we're squeezing. That is Baidu. Another one is Trip, which is C-Trip, I believe. Oh no, TripAdvisor. Now I can't remember if they asked about C-Trip or TripAdvisor. I think this is the one they looked at. Anyway, I don't like that. I mean, there's no reason for me to be involved in this. I'd rather play with Priceline. Speaking of Priceline, what did it do today? Priceline, it's recovering the 1,000, but still not emphatically. It's up 1%, but that's not a lot for Priceline. It's over 1,000, which is good. I'm still waiting to see what it does with regards to Draghi. I do like that, though, that it did not go red again today. So how about Apple? Apple is reporting also at the end of January, I think 127. See those white things we drew not too long ago? Not good. Not good. Close below it. It's not the worst close it had, but it's not the best one either. So let's see what next week brings out as far as open interest. I do believe a peek into next week, based on what happened today, there still is a 110 lid on it with regards from the open interest, and a definite roof at 115, and a whole bunch of overly exuberant people that are still stuck in the 120s. I don't think it wants to go there. It would need a miracle to get back up there, but who knows? Earnings for Apple are going to be strong, in my opinion, with regards to the iPhone. They're going to be weak with regards to the iPads, but that's what everybody's expecting. It all depends on what they say going forward. If they don't give us any visibility on anything new and exciting, they might sell it off. I'm not sure. So it's a coin flip to play earnings. I don't have any dog in the fight right here. If it breaks that pattern, it may drop to the 100 area. Then it would be nice to take a credit put spread on it. So hopefully people will hate Apple, will start selling it like crazy, and as soon as we see some clarity in levels, we'll jump in with both feet on Apple. So we're sniping Apple. It's on hold until then. Google today defied the 500 level magnet and dared to go to 510, but we knew from the pre-market open that it was going to hit resistance, and this is an important resistance area right there. Look at that. So there's no need to chase Google right here before it proves to me what it can do next week. If the markets bounce, Google would bounce. Technically speaking, a lot of people are calling for Google to go to the mid fours, this area right here. And these are good technical guys. They've been wrong on Google for the last 2-3 times, but they've been right on a whole bunch of other stuff, so it may be just their time to be right here. I don't have a dog in this fight anymore either. Netflix is big today. All the momentum stocks are big. CMG, Chipotle is already back in the 710 area. So what was weak today? Goldman Sachs even recovered from most of its badness. GoPro down 2.5% or so, but it was down almost 5%. That guy we've covered so much, but I'll give you a picture on GoPro, and that'll be the last thing I say here. I'm tired. Let's enjoy the long weekend. Oh boy, it played with fire right there. Look at that. Oh, lucky. I bet you if they lose that green one, this will come. Remember, we did a video, we said nothing good can come from that, but you never know. All it needs is one headline. All right, Nick Shaheen signing out. I don't want to see that. And if I remember anything over the weekend, I may do a special lesson based on the survey that you guys and ladies have submitted. I have a couple of areas that I need to cover, so I may do a special video on that. So if you were one of the ones that answered I don't know, then make sure to watch that video. Signing out.